Hello there everybody, a very good morning to you all and welcome back to HowToTrade.com and welcome back to another one of our live streams here in the trading room and also across our YouTube, Facebook, LinkedIn and X channels. Happy Friday. We are close to the weekend, which is fantastic. It's been a fascinating, brilliant week in the markets. A change in monetary policy globally, not just the Federal Reserve, but globally. I need to fix that. I need to get the batteries in that because that's really annoying that's not on. Because I am on air. I've noticed that over the last couple of days until it's been a slow Friday. In today's stream we're going to be basically going through the recapping sort of the live trades analysis that we posted out this week, as well as having a quick rundown of what the Bank of Japan Governor Ueda was saying this morning and what they've done with interest rates, what that could mean for the Japanese yen going forward, and then have a quick scout of the markets to look for some opportunities for today as well. So I do appreciate that probably the streams have probably been a bit heavy, fundamentally heavy. It's not our fault, it's just the way that it's fallen for us this week. But we have had some really good insight into hopefully we've delivered some really great insight into all of those interest rate decisions, and we tend to cover the big ones live as well. So thank you very much for those who tuned into them. It's probably a bit quiet out there. That's fine. Hello to you all in the trading room. Abdullah, hello to you. He's on our Facebook channel. Thank you very much for the message, and hello to everyone else as well who is joined onto the stream this morning. So the thing that I want to talk about firstly is what we saw overnight from the Bank of Japan, because it's an important cog in the financial markets globally. You saw what happened when they hiked rates in their previous meeting. It caused a bit of a shockwave, really, in the market, should we call it? So I think there was a little bit of nervousness heading into this particular meeting from the Bank of Japan. I can tell you, and you may already know this, that the Bank of Japan decided to keep rates at 0.25% in a two-day meeting that ended today, or this morning for me. Now, I've actually got a really nice article here from Yahoo, which is basically just really brilliantly noted down the sort of comments that we've heard from Ueda over the past sort of hours or so. In terms of interest rates, he said that our decision on monetary policy will depend on economic, price and financial developments at the time. Japan's real interest rates remain extremely low. Sign potentially of that Japan are going to increase their interest rates. If our economic and price forecasts are achieved, we will raise interest rates and adjust the degree of monetary support accordingly. You can just tell, and you compare that language from Ueda to Jerome Powell. Jerome Powell talking about, rate cuts quite explicitly. Ueda talking about rate hikes quite explicitly. Previously, what we've had is Bank of Japan keeping rates low, Federal Reserve hiking rates. That divergence is what's caused that dollar yen tremendous upside. Now what we're seeing is this, and as that happens, we should expect dollar yen to continue in the medium term to the downside. The outlook for overseas economic development is highly uncertain. Markets remain unstable. We need to scrutinise such developments carefully for the time being. Don't need to worry too much about wages or anything like that. This one here was quite important about inflation. On August inflation, it came in a bit stronger than expected. Some of it is due to the weak yen effect, including other one-off factors. Quite a bit of these factors will disappear. On the other hand, service prices are rising in line with our forecast as wages rise. That's putting upward pressure on inflation. We need to take all of these into account comprehensively. We also need to take into account overseas uncertainties and market moves. I would say that the reason that if you look at the Japanese yen today, the reason that it's taken a little bit of a beating, should we say? As you can see, look at that. Pretty much everything is up against the Japanese yen. I think there was some expectation or some excitement, or I can't think of the word now. I wouldn't say expectation, but there was a little bit of some rumbling of rumours that they potentially could be a bit more hawkish than they were, and at least maybe even hike rates at this meeting. I never expected that. What we're seeing here on dollar yen, if I get rid of this indicator because that's really clouding the market, is this is for me is still a market which is in bearish territory, right? Okay, I'm not too interested about those. Let's get rid of them. And if we play this, sensibly, we could potentially get a really nice short opportunity next week on dollar yen. In fact, this is probably a chart that I want to post potentially in the excuse me, in the trading room in just probably after the stream. What I'm looking for is I'm looking for dollar yen to trade up towards and hit this 61.8 area. That's at the 144.3 level. We're at 143.7, about 60 pips away from that area. When we do get into this area, what I'm going to do is I've got an alert set, as you can see, and I'm going to look to see what the market reaction is on the lower time frames. When we do get into that area, I will update you accordingly. Whenever I'm next on the stream, I'll come on and go through the reaction to that level and try and see if we can catch on to a short opportunity. Because for me, if you look at this, that's still a break of structure, and so we can class this as a break of that structure low. We traded even below 140 briefly, although we did close back inside 140. And I'm not sure how much upside this has got. Should this level fail and we continue higher, then we have got the we have got the order block which sits here, or supply zone which sits here. If we then get a break, if that fails and we continue higher here, then okay, we can probably safely say that what we may see is a move up to 150. But in the medium term, I can't see how long-lived dollar yen gains will be when we've got a Federal Reserve which is cutting rates and a Bank of Japan which is actively looking to hike rates in the future. Okay, and that's just my opinion. So I'll be looking to play that interest rate differential, as we call it, next week, and also further into that. So I think we may get a touch of that next week. So hopefully it doesn't happen today, because I don't really want to trade it today, but there we go. Okay, good stuff. Right, let me just check if there's any questions in the room. Good morning to you, Treehawk. Good to see you. Thank you very much. Emmy Remy, when is the time for the next competition? The short answer to that is I don't know. I'm pretty sure we will be doing a new competition. I don't know the exact date of it. All I can say is I'm not in charge of when that competition starts. It's above me. I'm just one of the coaches here. As soon as I know when the new competition is starting, then I promise you I will let you know. Okay. Hopefully it won't be too long. But again, I can't tell you when it's going to be because I don't know, unfortunately. Okay. Right. Let's quickly as well. Excuse me, because I've got a horrific cold. Do apologise. If we have a look at some of the analysis we put in this week, this is typically what we do on a Friday, just to end things on a nice calm note, is in our market analysis section we posted some trade ideas throughout the week, and I just want to quickly run through some of them. I'll start with the trend rider that we had on the pound versus US dollar. Some people got stopped out of it, some people didn't. If you did get stopped out, it was one of those ones where it will test your mental capacity as a trader, because what happened is the market, I don't know why it's just done that, excuse me, the market came and basically we got the test of our trend rider, we got the test of our EMA 12, but unfortunately, as you can see, we got the test of our EMA 12 there. And you can literally see how close this was to, being a really fantastic trade there. Look how unlucky we were there. So a little bit frustrating, to be fair, that we didn't manage to or if you did get stopped out. I can say that I did get stopped out, I'll be honest, which is, a little bit frustrating. But as you can see, the market did go on to make some gains. Guys, this is just sometimes how it goes. Other times you'll come and you'll be 2 pips from your stop loss and it will reverse and come into profit. All right. You have to be able to accept the fact that markets are random in nature, as per, if you read this book, it will tell you a lot about the markets and what they actually do. And that all we can do is give ourselves the best chance of a successful trade. If the trade doesn't go our way, that's fine. We move on to the next one. I wasn't bothered that it was frustrating, but it didn't send me off on a tangent. That's what the main thing is. If you feel yourself getting frustrated when you just about get stopped out, just leave. Just come back the next day. In terms of our, this is sort of a 3-in-1 trade here. If you watch my market, if you read my market analysis, I posted an article on all 3 indices this week. That was my main sort of take-in. And as you can see, US 30, I expect it to potentially hit 42,000 should we get a 50 basis point cut from the Federal Reserve. We did get a 50 basis point rate cut. Look where we trade at, 42,000. Yes, we had a little bit of a strange reaction straight off the back of the release, where the market initially surged, got up to 42, rejected, actually closed below on that 4-hour candle. But look what happened over yesterday. We got a delayed reaction, essentially. I am definitely short-term bullish on the stock market. Why? Because at the moment, whether I believe it or not, the soft landing narrative, which is basically where the Federal Reserve can cut rates with inflation falling and without a detrimental effect on the US economy or the global economy or whatever, there isn't going to be a slowdown, which basically the data that we look at there is the jobs data. The unemployment claims come in lower, which is good news. And this whole soft landing thing is sort of picking up steam. We'll see in the next coming months if it comes in. But at the moment, we're very much on a soft landing island. And therefore, we should expect some more gains in the stock market. Look, S&P 500 as well. If I could actually get that article up, shall I see if I can get it up? Here it is. Dow Jones hit target. Nasdaq, I said 20,000. If we see a 50 basis point cut, I said that we may see 20,000 in the Nasdaq. We got to 19,955. We're at 19,800 now. Could there be a quick 200 pips gain by the end of today to potentially close stock market really, really positively and actually see that 20,000 hit by the end of the weekend? I think that could be the trade today. If you're going to try and get into some shorter term opportunities, this is just a market which is just pausing temporarily. We've actually taken that low of this consolidation period out. Look at that. I'm not sure the best entry to try and get in. It might even be from here, to be honest with you, and try and really run a really tight stop just below 19,750 and try and target that 20,000 today. If you wish to do that, that could be a trade that potentially could work out. And for the S&P 500, I said 5,700 if we were to see a 50 basis point cut. And as you can see, the market is now closed above, on the 4-hour chart, above that 5,700. We've actually come and tested it again. So again, is there a short-term trade opportunity here? It's a difficult market to get involved in, a bit like gold, but all the best we can do is just try and get in to the momentum as it happens, okay? There's no point waiting for this huge 200, 300, 400 pip pull back into an order block. I'm not sure that sort of strategy is going to work. We may just have to use the lower time frames and just try and get in. And if you're not a big trader of the lower time frames, then I don't really know what to say to suggest. You just have to be patient, I guess. Like, for example, for the S&P 500, the most clear level that I can see sits down here at pretty much at that 5,700 level. So if we just move that up to 5,700, for today's trade, we could look for something like this. and then we could target, what's that, 2.5 to 1, if we can get that by the end of the day. It is no donation Friday, but there are potential opportunities when that US session opens to try and catch on some of those moves. Okay, good stuff. And then finally, just on gold, I'm showing the right thing on yeah, just on gold, right? Gold's been a real, I can't say the word, but look how close. I've got an alert set of 2530. Remains a really key support area for me. I'm sure a lot of people are feeling the same frustration as I am, and that's that it's been a difficult market to try and get involved in. If you have managed to catch on to it, there hasn't really been a bad entry. If you manage to hold on to some long opportunities over the last week or so, then you're laughing. I've been a little bit too cautious, just for my own personal development and learning. I've been a little bit too cautious in the fact that I've been trying to wait for deeper retracements, and I've just been swerved by maybe 10 or $10 or something like that. We got to 2547, I wanted 2530, so it happens. I say the same as I said yesterday. There was a nice trend rider. Look at that, boom, reaction down to 2573, and then another reaction. We're now trading above 2600. You buy it here at your own peril. People will say, yeah, but we're trending bullish, so there'll be a lot of people buying gold. Just be very careful, because we are quite overextended to the top side now. Instead, maybe the next level of support could be down here at 2562. That's a nice demand zone that we could potentially say, right, okay, boom, let's look for something like this. Because this market will pause, and it will give you opportunities for pullbacks. It did there. You can see we had Friday the 13th to Wednesday the 18th. It's 3 or 4 days of downside. But look how low volume those candles were. We were always, looking really vulnerable to another burst high, and that's exactly what we've got. I do think gold can reach, well, we're in uncharted waters here. So look, gold can reach 2620. Gold could reach 2650 in the current environment that we're in. I'm going to remain patient and look for my support areas. I'm happy to just watch it, because I've got loads of other markets that I trade, which I'm happy to have a look at. So I don't need to worry too much about anything. So yeah, I'll see how these markets go. Okay. I'll have a little bit more of a clearer print on gold once we see that sort of retracement come down a little bit more. But okay. Hello, Treehawk. I took the GBP USD TR strategy, but on this occasion it was on a demo account. Currently up 4R, fantastic. Would you close it as it's Friday and the weekend coming up? It has also crossed over the 40 on the ADX, but not back below. No, I wouldn't. I would hold it. I would hold it over the weekend, and I'd wait for the ADX to cross back below 40. Okay, and then I would exit. But at the same time, if you like to close off your trades for the weekend, you do that. I just wouldn't. I don't really get that thing. If you're into a winning trade, I don't see why people close it out on a Friday. I don't get that. Especially if you're trading on a 4 hour or like a daily time frame. If you'd like scalping, then yeah, I get it. But when you've got, that's what I would do. The man's speech this morning. Any info on what the plan is for the Bank of England? The Bank of England, Dan, we covered it in yesterday's stream, but the Bank of England is an interesting one because they were I'm going to say very less dovish. Is that a term I can say? They were a lot less dovish than I thought they were going to be. What do I think that means? I think that means short-term pound upside, but I also think it means that as we approach the end of the year, there's going to come a point where the Bank of England will need to cut. So what the strategy is here at the moment is we've got Bank of England who are keeping rates as they are and remaining less dovish, and we've got the Federal Reserve who are front-loading rate cuts and putting them in early and then probably going to hold. So that spells to me short-term pound-dollar upside, but maybe towards the end of the year we may see a reversal when the Bank of England are going to start having to cut, because you can't keep rates there forever because it will cripple the economy. And so I think what will happen with the Bank of England is they may keep rates there till the November meeting or the end of year meeting, maybe look to start cutting rates then. Do I think that Bitcoin is shorting? Do I think that Bitcoin is short? Let's have a look, Chris, on the YouTube channel. Let's have a look at Bitcoin. Uh, Bitcoin. Do I think Bitcoin's on the shorting side? No, I don't actually. In fact, Bitcoin is working out. When we had a crypto stream a couple of weeks ago, and I mentioned how, remember, this demand zone down here I said was really important for Bitcoin. Well, look, I don't know if anyone managed to get involved in this. That was on the 6th of September, so 2 weeks ago. Now trading at 2.5 to 1. 2% risk. You're doing all right there for a couple of weeks trading. I'm still in the camp that because we've got this soft landing sort of narrative, Chris, I believe that we may see Bitcoin continue higher. It's gonna face a important test up at 68,000 because that's previously where a bearish order block was. It's also looking like over the next maybe couple of trading days into next week, I think that Bitcoin can come and take out 65,000, and I think that would remain if I'm if I'm looking to get involved in Bitcoin on the lower time frame, sort of 1 hour, 15-minute time frames, my target would always be this 65,000. I think we could be seeing Bitcoin take that out over the next couple of weeks. So no, I don't favour short side just yet. If we start to see recession and we start to see weak unemployment data in the US, yeah, then we could see that definitely. Treehawk, I'm taking it so seriously as I'm currently journaling all the data on the TR strat. It's looking quite an interesting strategy despite it being so simple. Do you know what, Treehawk? If you don't mind, would you mind sharing that data with me? I'll message you after the stream because I'm interested in that as well to see if that actually, is a long-term profitable strategy. It's a strategy by Mario Singh. He didn't release the data on it. I've done some tests on it, and you can get some decent trades on it. You can. I'm interested to see what sort of data you find on that. I'll drop you a message anyway. Okay then. So that will do it for this week. We haven't got too much to worry about today. Canadian dollar retail sales. I think it's going to be a positive end to the. I think it could be a positive end to the week for the stock market. I'm not sure how much movement we'll get from the dollar, etc. today. It is a Friday, so it is no donation Friday. I'll be back on Monday at the same time. I'm always on at the same time unless it's a live event. So make sure you tune into those streams if you do wish to. And until then, if you do need me, I will be active in the room. Keep an eye on the market analysis section because I'm going to post a trade idea in there as well. And then we're going to go through all of my trades and what I'm looking for next week on Monday's stream. So I'll see you then. Have a great weekend and thank you very much.